Underwriting is one of the most critical and yet least visible parts of payment processing. It's where risk is evaluated, accounts are structured properly, and ECS merchants are set up for long-term stability rather than short-term approvals. No one wants to get approved for a payment processing account instantly only to be shut down a week later. That's why our underwriting team at ECS Payments is so important. We do our due diligence with a strong underwriting process that not only protects the processor, but the merchants by ensuring that accounts are built on realistic expectations and compliance from the start. Today, I'm sitting down with Shayla Sanchez, our Director of Underwriting and Risk. She oversees the entire underwriting process, and I'm excited to pick her brain and see how our department really works. Welcome, Shayla.
Hello, my name is Shayla Sanchez, and I'm the Director of Underwriting and Risk at ECS Payments.
So for someone who doesn't really know what underwriting is or what your department does, can you give me a brief overview?
So for those of you that don't know what underwriting is basically like a checkpoint before the merchant goes live. We take a look at the business model, the products and services that they offer, and potentially avoid any hiccups down the road. So during our review, we're also looking for any reputational, legal, or financial exposure. We're also looking for the best interests for the merchant and our customers.
So underwriting does have to look for those red flags when you're reviewing applications, and you can sometimes be seen as strict or overcomplicated. Can you maybe just go over what some of the misunderstandings are with your department?
So underwriting is often misunderstood as being a barrier, but in reality, we're a safety check. We're there to ensure that we're onboarding legitimate merchants, asking the correct information to ensure a smooth onboarding process and prevent hiccups down the road. One of the most common misconceptions is that when underwriting requests additional information, it means that there is an issue. The reality is that we're really looking for clarity to ensure that we're asking the correct questions up front to avoid future hiccups down the line, such as customer disputes, compliance concerns, or sponsoring bank requirements. If the merchant is upfront with their processing, then we understand their volumes, their tickets, and their transaction patterns. When we kind of hit like hiccups down the road, when it's like a retail shop for low ticket items, but you're running like thousands of dollars, there's a misalignment there. So that's when we need to take pause and say, hey, what is the merchant really doing? And that's when we'll reach out for supporting documentation. And then sometimes we do get pushback like, hey, why are you questioning my business? And it's like, well, we're not questioning, we're just wanting clarity on what you're actually doing. And it could be that they're running a big sale, it's the holidays, or that they've acquired a new product line that they're now launching. So there's a lot of different components that may impact that. And I just think being transparent up front and sharing that information like, hey, I spoke with the merchant, their upcoming business expected to do large volume, that's relevant information underwriting and risk should be aware of.
Can you give me an example of something where you've asked for an additional document, what that document is and what it is that you're clarifying?
There are times where we'll ask for supporting documentation around the ownership of the business because there is some inconsistent information that we're finding. So at times we will ask for a Secretary of State filing to show and confirm the proof of ownership if we're not able to verify it on our own.
Now that we have the foundation of what underwriting is, can we go more specifically into what your role in the department looks like?
So my day-to-day looks like hands-on collaboration with the team and also assisting in any escalated accounts that need to be reviewed. I also support the growth of the team to ensure that they understand the trends that are coming and that may impact the department. I also think about the big picture for underwriting and what it looks like for the future and how we can optimize the department to be more efficient.
So I really want to talk about the future of payments and underwriting a little bit down the road. So we'll put a pin in that one. But let's go back to the beginning and talk about your journey into your role here at ECS Payments. Can you tell me a little bit about what got you into this company, this industry, where you started and where you are now?
So I started with ECS 8 years ago in underwriting, and I have always been drawn to underwriting because I love the analytical part, the research, the critical thinking, and the team that we have built so far. I feel like I've learned so much, the complex deals, the trends that are always changing, and how the payment ecosystem is always evolving. And that's something that I love because you're always learning and always growing. And my growth here at USAG started from underwriting into Director of Underwriting and Risk, and I feel like I have worked with a lot of different business types, but also have seen the growth of the company, and I love being a part of it.
That role takes a lot of accountability. So what keeps you motivated in a role where kind of the future of someone's business relies on your decision?
I would say the things that keep me motivated to do what I do is that I'm always learning, always evolving, and the position is challenging. Sometimes you think that you understand the complexity of underwriting, and then a new trend happens and you're like, what? I didn't see that coming. or you see a new fraud or something pops up just overnight. And I feel that's what is the most exciting part of it, is that it's always changing, evolving, and you're growing with it.
So what's a trend that you're seeing that's popped up or that's changed?
So a couple of trends that I've been seeing is AI. There's a lot of deep fakes and a lot of like AI generated content and businesses that are created with AI. I feel like it has become a lot harder to identify like a fraudulent ID that looks real now, and it can be easily generated and manipulated. And I feel like something that I see in the future becoming more, I guess, worrisome.
Yeah. Is your team doing things to learn how to spot these fakes, these AI generated documents?
Yeah, so the team currently does attend educational webinars every single month to ensure that they're staying on top of industry trends such as fraud, AI generated content, and other industry trends that are happening. We are also seeing a lot of like businesses that are now doing like a digital good and also doing some type of fulfillment or like drop shipping with no inventory. And then kind of really understanding what the business does and how to underwrite them is what really makes underwriting so powerful.
Okay, so let's transition to the actual step-by-step process. Let's say you get a new application from a merchant. Can you go through the process from start to approval and finish and what that looks like?
So all of our applications are submitted through the payment connection, TPC. Once an application is submitted, it goes into ready for underwriting queue, where then an analyst will assign themselves to the application and start the review process. As they're reviewing the application, they're looking at the application details such as the business details, ownership information, legal information, the products and services that are being sold, the volume, the MCC code, the website. And then from there, they're moving into looking at the business as a whole, like how they advertise themselves, what customers have to say about them online. And then we go into the nitty-gritty, which is our customer due diligence, pulling a series of reports and also understanding what the business does and how they operate. Once that is all done, we then go ahead and approve the application, or we may ask for additional information. And all of that flows through the ICE support department. They are basically our liaison between underwriting, sales, and communicate any updates.
All that conversation happens through TPC, the payment connection. How has that changed your guys' life, basically, in your day-to-day operations since we've developed and implemented the payment connection?
TPC has really evolved the way we underwrite. We have a series of API integrations that have really reduced the manual amount of work that we used to do. And this has really made the department more efficient because we're reducing the amount of time we're taking to review the applications.
Can you tell me a little bit, maybe for someone who doesn't know, what is TPC?
So TPC is basically like a hub where all of our information is stored, communicated, record retention, reporting, everything in there. And it really houses just everything about underwriting, so we're not going to different places for different things.
In the process, what would really differentiate an application from being rejected to being approved?
I feel like the strongest applications are the ones that are clear, transparent, and the analyst can fully understand what the business is doing and how they operate.
What factors would lead to an application being declined just outright?
So factors that determine an application to be declined outright would be if we see a apparent misalignment with the information that's provided and what our requirements are. So some of those factors would include unverifiable information, inconsistent information, confirmed fraud, or confirmed identity theft.
So this whole process, I'm sure, takes time. But how do you guys balance getting a merchant approved quickly, because of course they depend on those payments coming through to make their business sustain, and taking your due diligence and making sure that an application is thoroughly reviewed?
So what makes the department so efficient is that we have a structured process that works for a lot of our various business types. And we also have seasoned underwriters that know exactly what to look for to prevent any issues down the road.
What would you say your average approval time is for a merchant application?
It changes based on the business model and how the application is presented. When we are presented with lower risk deals that are complete and generally are like retail shops, those are a seamless approval, maybe same day.
Okay.
When it's a deal that's more complex that requires more supporting documentation and a thorough review, it can take more than a day.
Okay, 2 days, 3 days. What's the longest?
I feel like the longest review time that we've had was maybe like 30 days. And it's not that we're not actively working on these deals, it's that we have to take pauses to really understand the business as a whole. So we may be going back and forth a lot. So we may ask for financials, we may question financials, we may ask for bank statements, we may want clarification on bank statements, and we really want to double check everything is consistent and in line with what the business is selling, because we have to think about we're not only protecting an ECS, but we're protecting the merchant and their customers from any potential issues down the road.
Yeah.
So some of the issues that we do find that make us take pause is like, hey, this merchant has problems with disputes, and this can be a chargeback issue down the line. So we have set amount of chargebacks that we need to follow as a company. Also, there may be compliance issues that we may need to address, and maybe we're not comfortable, maybe we are comfortable. It kind of just depends where it falls.
What about other businesses that aren't retail? Would they take 2 days generally, or usually less than a week? Like, what does that look like?
I would say it'd be around the same time. The differentiation between a low to a medium is that sometimes there's a website review that we need to do that may just take time to really go through the website. And it's not that we're scanning the website, it's that we're screenshotting, capturing all the aspects of the website, from the landing page to the contact, to the terms and conditions, the shipping, the refund policy, and then ensuring that if I'm a customer purchasing a product, I understand what I'm purchasing and when I will be receiving it.
So with that process, can you share an example of a time when underwriting a merchant more thoroughly has helped them not run into issues down the road, or you caught something that could have been an issue down the road? Do you have any specific stories like that?
Actually, I can share an example. We had a merchant that was a new business that was expected to scale very quickly. So underwriting understood the volume up front, what they were doing, which was a high volume. And they asked the merchant, like, hey, do you have a return policy in place of how customers can return their products? And also, do you have a delivery time frame so customers know when they're getting the products? And this really helped the merchant understand how to optimize their business to avoid future refunds or disputes from the customers. And it also avoided future delays and risks. If the volume was not disclosed up front, risk would have flagged the merchant for review.
Yeah, so it seems like sometimes you actually have to go in and help merchants set up their business structure, and it's not just approving or denying an application. You're actually helping them like kind of set up their business better. Mm-hmm. So what are these situations where you've actually gone in and helped merchants say about how our company, ECS Payments, handles merchant risk and long-term success?
The company culture really focused on long-term relationships and sustainability. We don't do the shortcuts. We want to ensure that these merchants are able to process for a long time, and that speaks volumes of our culture here.
Yeah, and I know that's something that differentiates us a lot from other well-known companies, is they're known to take shortcuts. Their underwriting process isn't really underwriting process and they get approved instantly. How do you think we're different from that?
We are very thorough when we review a business. We're really looking at the ins and outs, how they operate, and that we really understand what they're doing. And sometimes it does take longer, but because we need to fully understand how the business operates. And nowadays, businesses are starting overnight. There's new models, new trends, new markets. And underwriting used to be very black and white, verify the business, double check the risk, and move on. Now it's become like data that we're using to make confident decisions, but also intuition and judgment from the underwriting team that really sets us apart from our competitors.
And we don't shut merchants down without a warning because we know who our merchants are, we know what they do.
Correct.
Mm-hmm. So what would you say has surprised you the most about the industry or risk in general with merchants?
At an industry level, what has surprised me the most is how the payment ecosystem is always evolving and changing. And overnight, new businesses can pop up, new trends are happening, new fraud is emerging. And the blending of underwriting's intuition when they review applications and the data that we use is complementary to the role because it really kind of helps us flush out the bad actors. And before, I used to think underwriting was very black and white, but now I feel like it's really a blend of our judgment and our intuition when something just doesn't feel right that no data can give you, but only experience can show you.
Do you think that your team, certain members have different types of intuition, or you've seen like, oh, like I'm so confident on this application, but then one person's like, no, I have this feeling we got to look somewhere else, look deeper. Like how does that work in your department?
I feel the underwriting team is very well seasoned and they have different areas of expertise that they are familiar with. There are times where everything looks good and there's no red flags, but there's something in their gut that says, this is not going to end well, or this is not going to turn out to be what we thought.
Yeah.
And so we take extra precaution when that happens so that we are in line with the business operations and ultimately to protect ourselves for any financial loss. But there has been cases where they're like, no, this is wrong. And then they'll be like, did you check this? Did you check this? And it becomes into like a little like brainstorming session where everybody brings their heads together and they're like, did you check this? Or what was this look like? Or what did this look like? So I feel like it's really a team effort, but also based on intuition, judgment, and the tools we have available.
So you guys work together well as a team, but you also collaborate with teams outside of underwriting. So you work with our sales departments, referrals, merchant services. How does that collaboration impact our merchants? Both in the approval process and long term?
Underwriting is not just reviewing the application, it's really working with sales to get the upfront details of where the merchant is going or what they plan to do with their future business operation. And then having that information upfront really helps us set up the merchant for success. When underwriting reviews the application, then we'll communicate any potential risks that risk may see if they have a spike in volume, if they have a large sale happening, that they may then take pause and say, hey, something's not right, this is not what we approved. Having open communication really helps streamline the process and avoid future hiccups down the road. And then merchant services then supports the merchant when they become live.
Do you have a lot of communication with merchant services after they're live, even though you've already kind of handed off the application and it's out of underwriting's hands at that point?
We deal more with client success. So they work with any issues or major issues that the merchant may have where merchant services is not able to kind of assist with those. So then they go into a more like client success, and that's when underwriting works closely with as well.
How would client success and underwriting collaborate together? What kind of issues or situations?
Yeah, so this could look like if the merchant is re-apping their business and they're changing ownership and they want to have a seamless process. They want to let us know like, hey, we've sold the business, we acquired a new one, we're changing our products and services. Instead of kind of going through the normal channels of re-apping and going through the underwriting process, client success supports that relationship kind of from the beginning to the end.
How would you say that merchant education could impact a merchant? So what do they need to know that maybe they don't know upfront, or what areas do you think they can benefit from learning before either starting a business or submitting an application to start payment processing?
So I feel like the most common thing that we communicate to our merchants is kind of like website requirements or recommendations. We don't necessarily tell them to change their business and how they operate. We just give them like valuable feedback that they can implement to prevent future issues down the line. An example would be if the merchant doesn't have like a contact page and they're expecting to do like e-commerce sales, then we're like, hey, it would be beneficial if you could add a contact page to your website so customers can reach you, and this will prevent chargebacks or any disputes. And they're like, oh, I didn't even realize that it wasn't there. Like, let me put it.
What other things are merchants missing?
I would say that sometimes we do give a lot of feedback on how the merchants can optimize their business and how they operate. And then these are all just suggestions, like feedback. They don't necessarily need to implement them. It's kind of just to improve their business as a whole. Other things that we have recommended would be a clearer description of their products and services to avoid returns or chargeback. And also a clear delivery policy when the consumer can expect to receive their products. Because if they don't expect them within like 3 days, like you know how now we're used to having things so instant, they can dispute it, issue a refund, or cause a chargeback for the merchant. And this will then eliminate issues further down the line if they have a lot of chargebacks.
It's almost like when they submit an application to underwriting, they're getting a free business class. They're not just like getting like, hey, I'm ready to take payments, but it's like, hey, can you give me a little lesson? Here's my business, what do I need?
You know what? That's so funny that you bring that up, because I think that if merchants were to stay in underwriting for a day, they would literally see how much we try to help them create a business that operates to its full capacity with avoiding the hiccups down the line.
Yeah.
And I feel like when they look at the stuff we're requesting, the things that we need clarification on, anything that they're like, why are you asking for this? And it's like, well, we just want clarity to understand it. Underwriting likes to think about themselves as a customer. So if I'm going to buy a product from you, do I know what I'm going to be buying from you, what I'm going to be getting, and does it make sense?
Do you talk to sales and have them reach out to the merchant, or does underwriting actually call the merchant directly?
We use ISO support as our liaison between underwriting and sales. We don't typically communicate with sales, only if it's like a big merchant that they're trying to set up a smooth onboarding process. But we will call merchants if there is inconsistency in the application, or if we're not able to verify information. We'll just pick up the phone and call them and see what they have to say. And they're always really forthcoming and sharing details.
Okay, so it's not like you have to have you talk to ISO support talks to the rep then talks to the merchant, and it's like a chain back and forth. Like you can directly speak to the merchant from the underwriting department.
For underwriting related concerns, we can. But no, like you said, the first part, it's like a chain.
Yeah.
So underwriting to ISO support to sales to the merchant.
So what flips it from chain to like direct contact?
So direct, if there's inconsistent information, like for example, if they're saying that they're operating in Florida, but we're seeing that they're located in California, that's like okay, what's happening? Or if we obviously see that their presence online doesn't match their business, or if there's questions regarding the authenticity of the ownership or the business, we'll call and just verify, hey, did you apply for this application? And they'll be like, no, I was a victim of ID theft or whatever.
So with the payments industry constantly changing, where do you see underwriting changing over the next few years?
So in underwriting, I definitely see that technology is developing and evolving, and we will eventually be leveraging it more. I can see automated underwriting with AI, not as a replacement of the underwriter, but as a complementary to their current role, making us make more efficient decisions faster with data and tools available.
What part of the role would AI take over?
I think that the underwriting element requires the human eye as a judgment or intuition, but I do feel like AI could potentially automate the processes that gets us to the final decision. So like API integrations that we currently have available to be able to automate a lot of the reporting and remove the manual data entry side of it.
Okay, well that's interesting. I know that a lot of people are concerned about AI replacing their jobs, but underwriting definitely does need that human, like you said, intuition.
Yeah, the human element I feel like is not going away, because you can rely on like technology or like AI or a language model to be able to determine if something is risky or not. Because sometimes with new businesses, there's limited information and they rely on information to make informed decisions. And when that information is not available, you rely on the human judgment or eye to be able to make the final decision. And I don't think AI is going to take our jobs. I think it's honestly going to complement the role and make us more faster and efficient as a company.
If you could give yourself one piece of advice before starting your role as a director in the underwriting and risk department, what would it be?
If I could go back and give myself a piece of advice, I would say to really understand how to lead people, make informed decisions, and understand your information system, your technology in place to be able to support your team, make decisions efficiently, and be able to grow with your company.
I love that. Well, thank you so much for joining me and giving me a little bit of insight into underwriting. I'm excited to talk to you more about risk later on.
Thank you for having me.
Underwriting is all about building a foundation that allows merchants to operate confidently and sustainably. Many platforms prioritize instant approval, which may look appealing only to cause issues down the road when uncertain risk appears after the account is live. Because ECS Payments performs thorough underwriting without unnecessary delays, we set our merchants up for success from the start. If you enjoyed this conversation, visit our full library to see how ECS Payments supports merchants with experienced teams all in-house across every department. Until next time, I'm Shanna with ECS Payments.